Okay, what is up, Tycoon? What's up, traders? Super excited for today's video. Going to give you guys another update on natural gas. We're going to take a look at the natural gas futures. We're going to take a look at the natural gas spot prices, as well as taking a look at UNG and Boyle. We're pretty much going to go in that order. So if you're here strictly just for Boyle or just for UNG, you can skip to the second half of the video and get straight to it. Otherwise, you can go ahead and, watch the full video because you may miss some important things that we're going to cover on the natural gas futures chart as well as the natural gas spot chart. Now, with that being said, smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So we do have some good things happening on the natural gas futures chart. The month of February is over now, and so we're officially going to take a look here, right? And so we were looking to see if we were going to get this bullish reversal candlestick, this hammer candle. That's this candle right here, and we did get that. Okay, so that's a very, very good sign. And we're starting off and we're currently above the highs of that monthly hammer candle. So that does lead us to believe that we could potentially push up higher and potentially break out of this supply zone here in red and maybe even enter our previous supply zone up here in red as well. So there's a lot of work to be done, but as the month of March is beginning, things do look good on the monthly chart. These are our two overhead supply zones that we're currently going to be battling, right? We have a range from about 220 to about 250, 260, right? And then above there, we have about 310, 305 to about 360 is going to be the two major supply zones that I'm watching. Everything else in the middle is what I like to call no man's land. And those are not areas where there's imbalances. Okay. You want to trade areas of imbalance, whether it's a demand imbalance that has an excess of buy orders that pushes the price up, or a supply imbalance where there's an excess of sell orders that pushes the price down. That's what those imbalances are. And that's where those supply zones and demand zones get formulated from. Now, if you take a look, natural gas futures, we're testing a demand zone that we haven't tested in years, okay? It's been a very long time. As soon as we came down into that demand zone with that wick right here, that's when we ended up forming our hammer and getting a very strong push to the upside. So things are starting to look good on the monthly candle. As you know, the month of March is starting. We're going to see how this candle can close. Okay, if it can close bullish, right, and close above the highs of this candle, that's going to be a good sign. But if this thing ends up coming back down and getting pushed lower from the supply zone, then we will have to reevaluate some things. Okay, now we're actually going to zoom in a little bit more and go to the 4-hour chart. There was this rising wedge pattern that I'm watching on the 4-hour chart for futures. And you can see when we came down into that demand zone a little clearer here on the 4-hour chart, we quickly pushed up above and things are looking good. But, we have to keep in mind we have an overhead supply zone. All right, we did break below this trend line here, but again, this is a 4-hour candle, so we're going to see actually how this candle plays out. We're going to see if it ends up reversing and possibly could play out this rising wedge pattern. But I also mentioned in the previous video when I showed this rising wedge that we could break this structure completely, right? Just because you have patterns that you're watching doesn't mean that they're confirmed yet, right? So even if we just consolidate and try sideways, or we push back up and break through the structure, ultimately that's what you're going to be looking for if you're a bull, right? You just don't want this rising wedge to play out and bring us back down potentially to the demand zone here, or maybe even potentially to the gap fill right in this area on the 4-hour chart in between about 190 to 200. So that's what I'm looking at on the futures chart when it comes to the futures. All right. And, I have been in natural gas and playing natural gas. Okay. The shares I have in UNG were up about 13% when I started this video. All right. And these are the call outs, right? So you can see on February 7th, I started getting into it, right? I said this was a starter position. Then February 22nd, I added some more, still nibbling. And I may have wanted to get more, but I'm also playing things that fit my risk profile, right? So, when we were at 753 and I was able to get some more, I was comfortable because we were starting to show some strength bouncing off that $7 area. And so I didn't mind getting in at those prices. And if things continue to go lower, I'm still comfortable with my price to where potentially I may even add more below 753, just depending on how things look. Now, I did actually get into Boyle here recently, but I only got 2 contracts filled, right? So Boyle, I'm in the 25-26 call debit spread. These expire in January of 2025. So Boyle, a lot of people are saying it's gonna go, like to 20 to 15, to 25, even things like that. But with this play, when you're getting a debit spread, what you're doing is you're helping to reduce some of the volatility and the time decay, because you're also selling an option as well, right? And so these options are super cheap. They're $10 a piece, right? So it is pretty much kind of like a YOLO play. And as you can see, I hashtag that it could go to zero. There's a very good likelihood that this could go to zero if Boyle does not, isn't around 25 to 26 by January of 2025. But at $10 a piece, this is very fine. I don't mind risking $10 a piece to get a 900% profit, max profit on these. And I can take profit at 300%, 400, 500, wherever I'm comfortable. Those yesterday when I got into them, as the market's not open yet, but yesterday when I got into them, they were up about 120%. As I mentioned, I only got 2 of them filled. I actually have 20 orders for these to be filled. So we're going to see if any of those fill over the next 90 days. And if not, then, at least I was able to get a little bit of skin in the game on these, and, get about 2 of them to fill. So if you guys want to, be part of the Discord trading community, see, all of my real-time updates on things like during market hours, see what positions that I'm getting into, as well as the other admin traders. Okay, there's 3 other admin traders. There's a tons of resources that come in the Discord. All right, we have a stock bot that'll, you can use that and find out any of the financial info, short interest, lots of different things. Okay, so the link's in the description. Use code Zachly if you want a discount. But enough of that. Okay, let's get back into natural gas and go over the spot price. All right. Now, someone did ask me the other day, they were like, hey, how come you're showing an old natural gas spot chart, but you're showing the current futures chart? And that was because natural gas was down, right? Meanwhile, the futures were up. Well, the reason being is that it's very common, okay, for the futures prices to be higher than the spot prices. All right. And that's something known as contango that happens frequently. It's pretty common to see. So, that's kind of why you see that sometimes, why maybe the natural gas futures maybe a different price than the actual spot price. But enough of that. On this chart, we're going to go over the RSI and MACD signals, as well as some of the key levels that we're watching when it comes to the actual spot price of natural gas. So the RSI and MACD signals, right? This is going to be your MACD right here, and then this is going to be your RSI. We have these series of arrows all over. Now, the reason I have these on here is because they all align and correlate with each other very well. Okay, and so these are some of the strategies that I'm using, and using me to help make a decision, and that's ultimately what funded the decisions that got me in profit, as you just saw on those last positions. Now, whether or not that continues to happen, who knows? This is not financial advice, and I'm definitely not telling anyone to buy or sell any of these positions, but rather just going over some of the pure data. So you can see here we're making higher highs on the price. Okay, but when you come down here and look at your relative strength index, keep in mind, right, it's obviously measuring the relative strength at a given price. So if you're going higher in price, you should technically be going higher in strength as well. But in this case, we have a divergence, and in this time, it's a bearish divergence where we make a high and a lower high at the price where we're making a high and a higher high. We also get a MACD crossover to the downside. That red line crosses below the blue line. So we got about 2 signals that we could see some type of bearish activity. And sure enough, we end up pushing lower. Now, the opposite of a bearish divergence is obviously going to be a bullish divergence. And this is an example here where we're making a low and a lower low. Okay. But on our RSI, we're actually building relative strength and making a low and then a higher low right over here. So we can see now we have an uptrend on the RSI. Meanwhile, there's a downtrend on the spot price. And sure enough, that divergence ends up playing out and we get a nice move to the upside. And this has happened multiple times, right? Where we're making higher highs, lower highs, MACD sell signal, boom, come down, making lower lows, but making higher lows, get a MACD crossover, and boom, we go up, right? And so we've been respecting these divergences pretty well when it comes to natural gas. Okay, something that's really important right now, if you take a look, we have this series of higher highs right here, and then we had these lower highs as well as a MACD sell signal that led to this downfall. and really helped fuel it on the technical side, right? From a technical standpoint. But take a look, we have not retested this bearish divergence trend line yet. And I actually need to extend it out a little bit more, okay? Because we are getting very, very close to that region right there, into that area. And so let me just draw a little line here to extend it, okay? And so if you look, we're getting very, very close to that bearish divergence trend line. If you're bullish on this, you're not going to want to see it come up and get rejected and head back down, right? You're going to be looking for it to break that initial bearish divergence trend line and flip that to an area of support, and ultimately see your RSI start trading above that region. So if we can do that, that's going to be another bullish signal that we're looking for, a bullish sign. All right, we've had some bullish divergence going on when it comes to the prices on the natural gas chart, right? We had a low, we had a higher low, but meanwhile we had a low, we had a lower low, lower low. So we've continued to head lower in the price, right? But we're actually building relative strength and continuing relative strength. That's part of the reason why I felt kind of comfortable getting in and taking some positions that fit my risk profile that aren't necessarily super risky from my point of view, right? Now, we also got a MACD crossover here as well, along with that bullish divergence. And as I've pointed out multiple times, these divergences combined with the MACD sell signal or MACD entry signal have resulted in some pretty nice trades and, some good opportunities, right? So those those patterns don't have to repeat themselves. There's no 100% guarantee, but it is nice when you can have more than just one strategy you're using, and possibly even two strategies you're using as well. And if we combine the monthly MACD chart or the monthly natural gas futures chart, then we're also combining a third pattern, right? A third strategy, that hammer candlestick pattern. And then we're also combining a fourth strategy with that demand zone. So, the more strategies you can have to really give yourself confidence in the play and see multiple things aligning with possible entries or possible exit signals, that's what's really going to help give you an edge and give you that confidence that you need in the market. Now, here we're taking a look at UNG. We have our daily chart pulled up. We have our ABC structure, all right? And we also have the MACD and RSI signals plus the key levels. Now, this is 752 right here, and you guys remember I bought in at 753 on UNG, and that's because this was my target, right? This is really where I saw us going. I did have all of these support levels here. Okay, we had 1167, we had 1031, 904, 822, but we ended up breaking through all of those, right? And so I was really trying to see, are we going to end up bouncing at these levels? Or are we going to get our C wave extension to play out and our C wave target to hit? Okay, I did start averaging in a little bit above those levels just in case we did find support. But I was comfortable at getting in here right around that 752 target. When it comes to the ABC structures, right, your C wave is going to be, sorry, the 1.0 extension of 7.5, which was 7.52. Okay, so that's why I kind of got in there. If you take a look, right, the MACD has also been working along with the RSI. We have higher highs here. We get the MACD sell signal, bearish divergence. Okay, over here we had a head and shoulders and a MACD sell signal. Here we have a crossover to the upside. We see a nice little push up here. One thing that I do want to mention, all right, is actually going to be the fibs. So if you take a look and you're not familiar with how to use the fibs, you're basically connecting swing highs to swing lows or swing lows to swing highs, right? And so in a bearish trend, you're going to connect your swing high to your swing low, and it's going to give you the three major retracement levels, right? Now there's plenty of major retracement levels, but the 61.8, the 50%, and the 38.2 are the three most common and well respected. And so you use these because nothing moves in a straight line down or in a straight line up. You get a move down retracement, continuation of the trend, or you can get a move down retracement, consolidation, and then a breakthrough and spot a potential reversal. So I've been tracking the fibs, and you can see that we've gotten fib rejections 3 times in a row, pretty much throughout the past year, right? We had the move down, retracement, continuation lower, okay? And then we have another move down, retracement, continuation lower, retracement, continuation lower, and we've been rejecting the 61.8 or the 50% level pretty much each time that we've tested the fibs. All right, so these are the current fib targets. And some people may say, why do I have it so high up? Well, just the reason being is, I mean, look at this, right? This was our last fib rejection here. This is our last high. And since that time, it's just been straight down, guys. Now we are starting to bounce finally. Okay. But, there hasn't really been a bounce in between here or any type of retracement since this original high that we put in. It's pretty much just been a falling knife and just going straight down. So, we have to keep in mind our major resistance levels before we can hit our Fibonacci targets. Okay. And those are going to be 1167, 1031, 904, and 822. You can see we are above those currently. At this time. And if we're able to break through those, okay, our 38.2% retracement is going to be at 1270. Our 50% retracement is going to be at 1443. And our 61.8% retracement is going to be at 16.15. All right. Now, if we do break below 715, which is our recent lows, I do have some support levels. That's probably where I may look at adding a new position if we break below 715. But for now, I'm really kind of just sitting on hands and letting things play out. I'm going to see how they form. Okay, now that brings us to today's sponsor, Upside. Did you guys know that an average American spends between $150 to $200 on gas every month? Of course, this varies and depends on the state, lifestyle, and driving habits, but American families spend approximately $5,000 on gas annually, which is almost 2.24% of their monthly income. So you can use Upside to get cash back on your everyday purchases without changing anything about how you shop or live. You'll pay however you normally do with a credit or debit card, and cash back will be deposited directly to your Upside account. There's no limit on how much you can earn, and it even works with other coupons, discounts, and loyalty programs. You can earn cash back at 50,000 locations. All right. So what I like to do is I like to use a credit card that gets cash back, okay? And you link that to your Upside account, and then you can also get more cash back through Upside. It's really, really nice and offers some great savings. But for now, if you use coupon code RCQ599 when you join, you can get an extra 15 cents per gallon, okay? So RCQ599 will get you an extra 15 cents per gallon. And the savings are calling, guys. All right. You can use this money to invest long term, right? And buy an ETF like VOO or SPY. And you can just start dollar cost averaging with the savings that you're earning from your Upside account. You can do whatever you want with it. There's many, many options to receive your payouts. Remember, use code RCQ599. These are just some of the different payout options that you can choose, and you get to choose your own payment, right? So you can choose your bank account. You can get an Amazon gift card, Applebee's, Apple gift card, right? Maybe, you enjoy going to the movies once or twice a month. I know the movies have kind of died off, but you could even get free movies, right? And get an AMC gift card and, take the family out, maybe take your significant other out. Let's say you're addicted to Starbucks, right? And Starbucks is really eating your pockets sometimes, okay? You can go ahead and get your payout in a Starbucks gift card, or maybe you want some of the new Nike shoes. You can let your cashback rewards stack up and get yourself a nice pair of Nikes or Air Jordans, whatever it is you want. Remember, use coupon code RCQ599 when you join, and that way you can get an extra 15 cents per gallon on top of the savings that you'll be receiving. Now, we're going to go back into the charts here. Okay, this is Boyle. All right, we're going to be taking a look at Boyle fibs. Recently, we did hit all-time lows, okay? But you can see here that these are going to be the fib targets if we can break our major resistance levels on Boyle. We'll get into those in just a second, but the fib targets are going to be 1912, 2365, and 2818. Okay, there was a nice little head and shoulders over here, but this is a fib reversal. Okay, so I talked about the reversals earlier. So, we have a swing high over here, we have a swing low, we move down. All right, we retrace, consolidate, and then we break through those retracement levels, right? So we broke through our major retracement levels, and we actually got a reversal and put in a high and then a higher high. So, that's something that's always going to be a possibility. Just because we come up to the fib targets doesn't mean that we have to go straight back down. All right, there is even the chance we could come up, consolidate, and break through those and try to put in some new highs. So definitely keep that in mind. Now, after that, right, then we had a new swing high to a new swing low, and we came down and we rejected the 50% retracement level and continued ending up heading lower. Okay. Now these are the major resistance levels that we're going to have to pay attention to, as well as support. All right. Currently 795 on Boyle is going to be that really big major resistance level. Okay. If we can break out past 795, then we do have the potential of heading all the way back up to 1461. All right. You know, it's a long ways away. There's definitely a lot of work, but Boyle moves fast. And, you know, it's obviously a leveraged ETF. One thing that I am tracking, this pattern has not played out yet. Okay. It's just something that could possibly be forming, is going to be this inverse head and shoulders that could take us back up to the $11 region on Boyle. Right. And so we do have a left shoulder. We do have a head right here. We're starting to pull up, but if we get any type of a pullback and Boyle holds above, you know, that 550 range, that's going to be a right shoulder, right? So, you know, it would look like this, okay? And so if we start to pull back a little bit and we do get some type of pullback in Boyle, as I mentioned, if we can hold, you know, above that like 550 range, all right, and find support and push back up higher, there is a chance we could get that inverse head and shoulders pattern and see that play out. So right now I'm just watching it. Okay, really all we have is a left shoulder and a head, but it is a possibility that this could be forming if we get some type of a pullback over the next few days. Right, so definitely keep that in mind. Below 795, we didn't reach it, but my bearish price target is going to be 320 on Boyle. So if we do, you know, break right around that 550 area and break our most recent lows, most likely 320 is going to be an area, a bearish price target for me, aka an area of support where I may look to add to some type of Boyle position. Not too sure. You know, Boyle is very highly leveraged and very highly risk. You know, lots of risk involved with Boyle. But a lot of people really like it, and a lot of people see some really great opportunities in Boyle. You know, I can't say that I disagree necessarily, but, you know, I can't tell you guys what to buy. This isn't financial advice. This is just, you know, a breakdown of the charts, giving you guys my opinion. Now, these are going to be the MACD signals and RSI signals as we went over them on many of the other charts. It's very useful, and, you know, one of the reasons why I started getting some positions in natural gas. Okay, guys, you know, we're seeing bullish divergence, right? We have lows, we have lower lows. Okay, we have a bearish trend line right here. But meanwhile, the RSI is actually holding relative strength, right? We have a low over here. We start getting some equal lows, right? So in this case, it's a slight bullish divergence because we're not heading lower, but we're not necessarily putting in a really higher bullish divergence, but we're maintaining relative strength as Boyle has dropped from $30 all the way down to $5. Okay, and then we also got a MACD crossover on Boyle right around through here. As you can see, we didn't really get any follow through once the MACD crossed over right there, and we actually continued to keep heading down and trading sideways. So, you know, that's why I've been a little bit more patient and hesitant to get into Boyle. And also just natural gas in general. And so the reason that I like to look at the futures chart, the spot chart, UNG and Boyle, right? Even though I don't necessarily trade all four of those, is because, you know, you may see signals on some of the different charts that you're not getting on some of the other ones, right? But once you start to see the same signals aligning across all of them, then other traders are going to be seeing these signals as well. And it could end up becoming a self-fulfilling prophecy where, hey, just because, you know, we have some of these indicators firing off and some of these signals firing off, it could drive traders and, you know, technical based traders such as myself to, you know, take some positions, and that could cause a little bit of buying pressure. But that doesn't mean that things have to play out. You know, natural gas has been bleeding really, really hard for a lot of people. They've been catching a falling knife, but hopefully this video helped provide some clarity on some of the price action and some of the different things that I'm looking at whenever I look to make trades and make decisions. If you enjoyed it, smash that like button, subscribe to the channel. I'm doing videos on natural gas, UNG, Boyle, pretty much every single week. So you can look for some consistent updates and see, you know, how things are changing and how the landscape is looking as well.